Charles, good morning. Thank you for coming on the show. Why don't we start off with a little bit of bagua, rumors, because you're on the ground there in Shanghai. What are people talking about when it comes to Evergrande?
Actually, people are talking about the crisis of Evergrande is accelerating. It has already lost some sources of financing. For example, the commercial bills and the bond market and lending from friends. And now it comes to the bank loan. Has spread to the bank loan, actually, which is the most important source of financing.
So you mentioned all the hurdles ahead. Some of their assets have been frozen. Some of the property projects also have been halted as well. Do you think then the Evergrande can actually raise enough cash, Charles, to avoid a default?
That would be very difficult for Evergrande, and more difficult, because we can see that the doors are closing one by one, but I can't see any new windows.
Okay, now, you make a very good point, and I was hoping if you could elaborate more on this point for us, that Evergrande is big, but they're not big enough. They're not too big to fail. Could you give us an example of a company that's too big to fail, bigger than Evergrande, but not quite, of course, Evergrande is not quite that scale yet, just so we have an idea, of course, of what is too big to fail when it comes to China?
When we refer to too big to fail, it means that when it fails, it may cause a financial crisis. But in the situation of Evergrande, and I think the risk is quite low, because although its debt is huge, but it is scattered among many financial institutions and investors. So, you know, everybody loses a small piece of cake, and that won't cause a crisis.
You mentioned
and we also have. You say.
Yeah, I was going to ask you about when it comes to selling the non-property assets, because that still perhaps is a window that they could tap into. BNP Paribas said they saw about $80 billion worth of equity in non-property businesses that could help generate liquidity if sold. The question is, though, can Evergrande actually sell it at an attractive price for those assets? And what kind of spin-offs are you looking at now?
Actually, its non-property assets aren't making any profit. So in the current situation, they may not seem to be attractive to investors. On the contrary, its property assets may be more attractive. But the question is, in the current situation, very few Chinese real estate companies have the money to take up so many assets. That's the question.
Okay, so you know, when people approach, at least foreign investors, when they look at this sector, I mean, of course, developers are going to have a lot of leverage. That's simply the nature and the structure of the business. They will need to take on a lot of debt here. Case in point for Evergrande, and to your point, Charles, when you invest in these companies, what do you mean by don't invest in a company that has a soccer team? It's too diversified, Evergrande. What do you mean by that?
Partly from the recent experience, because especially in China, those companies have a soccer team, have quite a large opportunity to fail, like Suning, like Evergrande, and like Huaxia Fortune and Huaxia Xingfu. Yes, many companies which have a soccer team do not have a good time now. So be careful of that.
Be careful of that. Do you think Evergrande is just one of many sort of credit risks that we should be looking out for in China? What sort of spillover do you see in the broader industry, and is contagion really an extreme scenario now?
The direct contagion has already fallen. I have just mentioned Mr. Zhang Jingdong, a friend of Evergrande, has been forced to sell Suning to Alibaba. That's a direct contagion. But I believe there might be more contagions, but I think the things won't go out of control. Emotional contagions may, in the market, in the stock market or in the bond market, may give the investors an opportunity.
Okay, let me end on that then, Charles. Is there a price at which you would buy Evergrande stock or any of its bonds, given the information you have right now?
For stocks, it is hard to say because it is very difficult to estimate the future of Evergrande, and it is very difficult to calculate its liquidation value. But for the bonds, I think the investors should not sell in panic. Anyway, it has some assets that worth money.
Okay, Charles. Yeah, that's a very good point to make. How do you compute liquidation value? I mean, I guess price to book, but do you believe what goes into I guess computations of book value? Because I think we're at 0.6 times
for the
book value on the company's stock. Go ahead.
For the debt side, it depends on many specific articles. For example, do you have the guarantee? Do you have a mortgage? Do you have asset-backed? Right. It's quite rather complicated. If you have asset-backed, for those asset-backed bonds, and if you have some kind of guarantee, asset guarantee, I think the current price I should not say it's attractive, but if you can persist, you probably wouldn't lose money.